should investors be viewing all of these day-to-day trading moves, such as in Silver, BlackBerry, AMC, GameStop, all the ones that have been grabbing the headlines of late?
Yeah, sure. So it's important for everyone investing into the financial markets to pay attention to buyers and sellers, and especially marginal buyers that can be influential to short-term prices. Having said that, there are still debates about the impact of this marginal player in the market last week. So whether that was that influential or not, or whether they were in fact two sides, buyer and sellers at the same time. So what we do in our strategy is that we take that into account, but we know that it can be more of a measure of sentiment and whether the risk in the market can be amplified or diminished by this player, but it's unlikely to be a secular forces for the next 6 to 18 months. So that's why we tone down this in our portfolio allocation.
So there is nothing that you see that gives you cause for concern that it might destabilize the markets in more than just a very short-term manner?
It can be destabilizing on the short term, of course, as you saw on last week, a dip of minus 3% of the indices at that time. But that was also at a time where earnings were coming through and some of them were disappointing. It was also at a time where you had issues with the virus and potential mutation and vaccine efficacy. So I will not say that we can point only to the retail trading activity to be the sole explanation of volatility. It's one of the components, and there are other parts that we should look at, because if you take a step back and if you look at German Bund at minus 0.60, that's also something that could be a cause of concern, because it's very expensive relative to what you had historically. So you can see bubbles, or you can see extreme prices, not only in these retail stocks that we talked about. There are other aspects in the market that can be of concern as well.